Hey, what's going on? It's the Bearded One back at you again. New video. Hey, so in today's video, we're gonna talk about refinancing.
Yeah.
I mean, refinances has actually went down significantly since rates have went up. So we want to talk about, is it still a good time to refinance? So stay tuned to this video and we're gonna talk about all the refinancing you need.
Yeah.
All right, be right back. All right, so I am the Bearded One. I am a local realtor here in Jacksonville, Florida, and I have today again Miss Shauna, and we're gonna talk about refinancing.
Okay.
And so, let's go back a little bit. Refinancing was a big thing back during COVID. I mean, based off the interest rates being super low. I personally refinanced my house, and it's really pretty nice. Yes, yes. So kind of tell us, so things have changed, interest rates have gone back up. Is it really still a good time to refinance?
I would say it's depending on your situation.
Okay.
Right now, the unfortunate part is that rates are higher than what they were, but the home value is increased as well. So a lot of people have more equity in their home than they think they do, or that they know that they do. So pulling out equity for different things is a situational thing. So if it's always a good time to refi if there's a situation that calls for it.
Got you. Now I've seen people can take out refinance. Now kind of explain, what does that mean? Does that mean you taking a second mortgage, or what does that refinancing mean?
There's two different options for refis, right? Okay. So you could do a cash out refinance, which means that you'd be essentially redoing your first mortgage. So unfortunately, you get rid of that 2.75 rate that you previously have.
Got you.
And then you would bring cash out of that. Or you could do a second mortgage option and do a refinance in a sense that way and take out equity in your home. So there's two different ways to think about that.
Now let's talk about that for a second. So now if you do a cash out and you have a second mortgage, does that mean you keep your first mortgage stays in place at the 2 point whatever or whatever you have interest rate and you just pay?
Yep. So essentially you still have your first one at 2.75, and then you would have a second one at the interest rate of whatever it is at the time, and you'd be making two payments. But again, it depends on the situation. So if you're consolidating some things and paying off some things, that'll save your interest rate in that way, or whatever you want to do with it. So yeah.
Got you. Now, from your experience, what have you seen, what are the limitations on what you use the cash out refinance for?
There's really no limitations. It's your money.
Okay.
We will ask what's your reason for money. We make sure you ain't going over to China, but but whatever the case may be, you can really use it for anything. So I've seen so many things: pools and debt consolidating, investment properties.
So you could really take this money out, equity out of your home, and just use it. I mean, it could be college tuition, it could be repairs to your current home, it could be really anything that you wanted to use it for.
Yeah.
That's legitimate.
Yeah. Legitimate.
Got you. Got you. So now refinancing, I mean, a lot of people have shied away from it based on the interest rates. And you've mentioned that it really depends on a person's situation, if they can tap into the equity to help pay those bills, or to help, because right now we have inflation still, everything's pretty expensive. They can use that money because the money is really theirs because they own the house.
Correct.
So what have you seen? Are there any downsides to refinancing your home in those two options that you gave the viewers?
I would probably just say the interest rate's different.
Okay, just interest rates.
And if you're thinking about doing that, really just think about the term, right? So if you had a 30-year mortgage and then you paid your 5 years on it, do you really want get with a good lender and a professional that's going to give you those options? Because if you go back and do another 30 years, you're kind of repaying those 5 years that you've already paid.
Got you.
So get options in that aspect. But that would probably be the only downside: rates, and then potentially paying back the years you've already paid.
Got you. Because once you refinance, your time ticker starts back over.
Yeah. In some cases, like I said, if you're working with a good lender and they give you those options and say, hey, you've already done 30 years, maybe let's look at a 20-year or a 25 years so you don't have to pay those other years back.
Got you. Now I want to ask a question. I'm hoping you can give us the answer to it. Now, a lot of people ask me, what's the major difference between a refinance, cash out refinance, and a HELOC?
So a cash out refinance is pretty much you taking the cash out of your home, you redoing the first mortgage, you're getting rid of your 2.75 interest rate, and you're just borrowing cash. You're starting all over again with a new lender, right? So if their rate is higher, that's your rate for the next 30 years. A home equity line of credit or a HELOC is similar to like a credit card. So it's a second mortgage that you would put on your home, and you can use it as you need, right? Like a credit card, you just spend on it or take out the money, use it, pay it back. Take it out, use it, pay it back. So it's kind of revolving in a sense, and then you can just use it, put it back, use it, put it back, use it, put it back.
Got you. Okay. That sounds pretty cool. So you could essentially have one or two ways. You can get a big lump sum of a cash out refinance,
right,
or you can have a HELOC, which is basically having a credit card on your home, on your equity.
Yeah.
Got you. And the interest rate still apply on that HELOC, right?
Interest still applies on the HELOC.
Got you. Okay. So anything else that people get confused as far as refinancing and HELOCs and whether they want to take equity out of their homes? Because I mean, we all know that the past few years prices have went up and a lot of people got a lot of equity in their home. So what would you say is the biggest misconception?
I think the biggest misconception is really the higher interest rate now in the mortgage world. But look at your whole picture. So if it's something that you're looking to do as far as debt consolidating, look at the interest rate on your credit cards, look at the interest rate on your auto loan, look at the interest rate on whatever you're looking to consolidate, because 9 times out of 10, even if you do have a higher interest rate, it's much lower than the credit card or the auto loan that you're paying over a long period of time.
Yeah.
So just kind of look at the whole picture before you shy away from saying, hey, I don't want my 2.75 interest rate anymore, or I want to keep that. I don't want to go at a higher rate, but look at the bigger picture.
Yeah, because most credit cards are what, 19, 20?
20, 22, 26% sometimes.
Ridiculous.
Crazy.
So is there anything else we want to talk about or you want to explain to the people about refinancing?
I don't have anything for refinance, but home equity line of credit are definitely a good option. And it's always good to have a home equity line of credit as a resource in an emergency fund. Something to definitely consider.
Got you. So now, even though now that, like you said, that money's just sitting there for you to use and you just pay it back, use it and pay it back. So that's probably maybe a slight edge better than refinancing, would you say? Or
slightly, yes, slightly. Like I said, it just depends on the situation.
Gotcha.
Yeah, but slightly better. Again, it's a great source of an emergency fund, or if you have some upcoming repairs like to the home that you need to get done, you can just pay the blinds, pay it off. So it's definitely better, and it's really slightly good for your credit too, because you have a good large line of credit that we see on the credit report, or that the creditors see on the credit report, that you can pay.
Got you. So wow, I just learned something new.
Yeah.
Learned something new. Well, that's all I have. I don't have any further questions. Refinances is still, people are doing them, right?
Still a thing.
Still a thing. And even though it's a higher interest rate, people are getting that money out, equity out of their homes to do what they need to do and take care of their families. I mean, that's really most important. So their homes and whatever else they need to do in this day and time. How can people find out where you at?
On Instagram, I'm Mortgages by Shauna, and on Facebook, it's just Shauna Thompson.
Absolutely. So you guys know who I am. Hit us up in the comment section. You got any further questions, and we'll try to answer them. And if not, we'll probably shoot another video explaining those questions. So that's all I have for you today. See you in the next video.